Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, February 24th, 2020. I've already done, this is the second video update, and I put out some charts today, but I wanted to do one more follow-up, a little bit more inclusive of some of the other trade ideas. Earlier today I focused on really the risk-on and risk-off assets. Gold and silver is the risk-off assets, and then equities is the risk-on asset. Right now we're in a risk-off market, at least as of today, and of course Friday. Remember, Friday was our biggest drop in the Qs in a while, and today is even bigger. So we're still at that. Like I said earlier today, there's not a set ceiling or floor on how much the market can drop in a day, but that's usually, especially if you're not in meltdown mode like 2008. Usually that floor is around 3 to 4. Once in a while you'll see 5%, but that's very rare. So we're down 4.15% in the Qs today, and that's just the that's what happens when an lopsided top-heavy trade. You see a rush for the exits. Everybody wanted to own Apple, Facebook, Amazon, Microsoft, and they're also top components of SPY. So what happens is they get sold. Here's Apple down 4.37, Microsoft down 4.25. What I'm doing is going through the largest components of the NASDAQ 100. Amazon 4.94, Alphabet 4.92. So you see the common theme in Facebook down. So collectively, they're down worse than the market. So they're leading down. They're down more so than the rest of the stocks on collectively on the NASDAQ 100. And that's, again, it's just simple math, and everybody owns those. Those are what gets sold down, and that's what people are getting out of today, and that's what's forcing the indexes down. So back to the indexes. So it looks like we're going to make another run at those lows. We're close enough now. Effectively, this is a test, we'll call it. The opening low today, the spike down at the open was at 220.26 on QQQ. SPY's already undercut that low by a little bit. But QQQ, as I said earlier, if they come back down, and now it looks like they're going to run at it. Usually when you get that close, it's like a magnet. And now anything's possible. They could hit 220.26 to the button, but usually when they get that close, the market makers, the powers that be, know there's a fat cluster of stops sitting under there, and they're probably going to make a run at that. So as I said, I think that'll mark the lows for the day when we undercut, you'll see a quick spike down. If that happens, usually you mean a big red candle, and then what you want to do is look for a reversal candle. There's nothing to say it can't morph into anything more, but I think that would be it. And then at some point, especially since we still have another hour, 2 hours and 45 minutes or so to go, there's a chance to get a rally today if we get a washout move. Now, it could be more than that. The charts are not looking good. Here's that trend line. Take everything away for you real quick. Or maybe I have a cleaner board. Yeah, that's a little cleaner. There's that trend line off October 3rd lows. We're well below it right now. So where I was looking for a back test of that trend line, and I still am, don't get me wrong, the fact that we haven't been able to rally up there so far shows you there is just a lot of selling pressure. They sold into that initial pop. So let's see what happens today. But I want to say on the 60-minute chart, this is a breakdown. That was my target, initial swing target. So we said that can morph into something more, and now we have a more powerful sell signal with the break of that trend line, and you can see it here on QQQ as well. On QQQ, you can see the same trend line well below that trend line now. Here's some support levels nearby, but at this point, next decent support comes in around 218.60, give or take. It's not super well defined, and then all the way down here at about 211.29 or so. Let's look at some of the recent trade ideas. Starting with, let's go to here. We have a lot more longs lately. Let me pull up another the trade ideas on another chart here, another monitor. I'll start out with AMLP. AMLP is a play on the energy sector. So that one has today, it's cleared the 7 now. So there's some good and the bad in the chart. The bad is it stopped out. So officially that trade stopped out. We'll get an update out to you guys as soon as possible. On the positive side, if the markets and crude can turn around, rally soon, you have potential divergence. So I'm going to roll this in a little tighter. When I say potential divergence, I'm referring to we have prices making a lower low at that point, and the indicators so far are making higher lows. But however, these are momentum indicators, and the momentum, and they're pointed downward right now, and they can continue downward. So unless they reverse to put in higher lows with a crossover here on the PPO, bullish crossover, that's only potential divergence. But something to watch here, and that would most likely match with oil reversing. The recent trade on oil, we were able to get in right off the lows there before the breakout of the wedge. Went a little lower, but the stop at the time was down there. We were able to milk almost to the penny, to the high point on that run. We got out at 11:36. It went as high as 11:43, and then we sidestepped it. So in other words, they got us on AMLP, but we were able to successfully trade USO from the lows to the highs. So that's kind of a wash there. Now, the big question is, will USO hold support? Remember, the basis for this trade, although we traded it off the 60-minute chart, was based on the daily chart here. Long-term support right there at, where is it? Right there, long-term support. And we're back to that level now. So again, I think AMLP, although it's officially stopped out, if for those that might want to give it a little more room, there's still certainly a shot if oil can hold this support level. If this is just another test of that level, and we rally from here, the energy stocks and MLPs should rally along with it. Up to you whether you want to give it more room or not. And again, I'll provide another update, but I have to put a post out on the front page, moving that to the completed trade categories now that the stop has been hit. All right, so that's crude oil, that's AMLP. I'm just going through these in order as they're listed on the official active trades. CWH, Camping World. I need to go to a daily chart. This one is a growth and income trade as well as a swing trade because it pays a nice dividend. And there's your uptrend line, which has now been broken. We had an uptrend line it was walking on. I've updated this one quite a bit recently. I said, look, T2 may be the end of the run for this one because when we hit T2, not only did we get the reaction as expected, we made a almost 62% gain on it so far. But we had negative divergence, so this was my concern here that said, we may or may not make it up to T3. I still don't see enough to change the trading plan. I pulled the stop up already. I did change the plan from there to tighten stops up to protect profits, and I'll leave it at that for a while. 15 is the first support coming up. Obviously, it would be nice to see it hold that level. If it breaks 15, we've already broken the trend line. Breaks 15, we'll probably have our stop hit, but there are no guarantees. And again, there's just not enough in the charts since the primary trend in the stock market is still bullish. The primary trend, not the 60-minute trend right now. 60-minute, we're in a near-term downtrend. That's what the 60-minute chart looks like. Here's our downtrend, boom, 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 working down. But when I go out to the weekly time frame, all my weekly indicators, trend lines, 40-week moving average, especially the monthly chart with here's your bull market uptrend line in QQQ right here, this guy, and we are well above that. So it's way too early to say that this is anything more than just another correction in an ongoing bull market. This chart will take a while to change. You have to wait for a monthly candlestick close. Sometimes you have these intra-month breaks, but then you close back above it. But you can see this 20-month period moving average. On a scale 1 to 10, I give it a 10 for both effectiveness combined with the simplicity. See, there might be some great indicators out there that are very complex, run a lot of algos to run them, or trading software. But you have just a moving average. It's not the simple moving average. I use the exponential moving average, but it's one single line. Does a phenomenal job at defining bull and bear markets going back for decades. When you're above it, back in the 90s, you're in a bull market. You break it, and when you're trading below, this was the dot-com bust and the bear market then. You got back above it through the next bull market. This was the 2008 meltdown, the financial crisis, into the 2009 lows. You broke it here and back tested, and then you were below it. And since then, it has done a phenomenal job of defining the uptrend. Again, look at the monthly candlestick closes, and it comes in perfectly with the uptrend line. So by those two metrics, which would be, that's where you take those out on a solid monthly closing basis, and a good chance the new next bear market is underway. But that's still 13% below us. Not to say we can't go down there, not to say we can't go down there fast, because that's one thing I can promise you, that when the tide turns, especially after a prolonged uptrend, the market can fall, and often does, very quick. It's one reason I love shorting stocks. They tend to fall faster than they rise. So I just want to mention, for now, the trend is up, and as such, you want to be a little careful with shorts. Look to buy pullbacks to support. And let me get back to the other trade ideas, because we've already talked on the markets here. Just kind of wanted to flip over to that longer term frame. Camping World. Now, there's a couple ones. I covered CWH, Camping World, NEOS. We have two, maybe say three, but at least two what I call junk stocks, on trade ideas. The market has been a strong uptrend for a while. What happens after the market's been rallying? People become more confident, psychological thing, and they like to gyrate. They tend to, gravitate towards, lower quality, higher risk stocks. And we've traded quite a few of those. We've had double, even triple digit gains on some of these, especially the little biotechs. And this one's a special to generic drug maker. But it's down today because, it's a risk-off environment. Just about everything with a ticker that's an equity, whether it's indexed or not, unless it's something like a defensive issue stock, they're going to be down today. There's not enough here to modify the trading plan. There's an uptrend line. There's a stop level right around there at 143, and their targets. I just want to say that unless the market rallies soon, this dash or trash, these lower quality stocks, it may be over, at least for the time being. Same with Puma Biotech. A lot of these biotechs, when the music's playing, I like to equate trading in the stock market to a game of musical chairs. That's where you play in kindergarten, where they, if there's 10 kids in the room, they put 9 chairs out, and you play music, and the kids walk around, and as soon as the teacher stops the music, you got to grab a seat, and there's only 9 chairs. The last guy left standing gets holding the bag or loses, and they're out. And in this case, you can see, the music's playing, meaning the stock market's rallying. These things play out well. Rally, pull flag, broke out, started to go up. What happened? Well, Friday happened. Friday was the biggest down day the Q's had in a long time, and biotechs are mostly, the QQQ or NASDAQ 100 is very heavy in biotechs. They were down with the market. That's Friday, and market's down today. So Puma's down again. So it's foiled this potential bull flag from playing out. I put pretty good odds that if the market rallied on Friday and rallied again today, we'd probably already be at or close to that second target, but that's not the case. So just keep that in mind trading these, and you'll decide when to pull the plug. This one's not over yet. We'll leave it alone. I'll leave the targets as is for now and the stops, but it should hold ideally this 1091 level if it pulls back. 1090-ish, we'll call it. That's support. But again, it's going to depend largely, I think, where the market goes. If the market can, recover today's losses and start to rally again soon, then this one has a chance. But otherwise, I'll just say this: I wouldn't be adding to this one right now. I'd be more concerned about where to pull the plug if you're in it. Riot has to do first with Bitcoin. We'll look at Bitcoin. Bitcoin broke this trend line, danced on the 23-ish support for several days right here. 1, 2, 3 successful defenses, and then boom, broke it today. Impulsive selling. I would have normally figured, and it's not always. There's not always a risk-on, risk-off relationship with Bitcoin in the market, but sometimes there is. That's not the case here. This one is technically driven. We have broke down and Bitcoin's down, so therefore the Bitcoin proxies like Riot and Overstock are not going to be doing good today, and they're not. Riot's back to that 130 support. We entered there before, broke out, took out the 130 support. We waited for a pullback, got in at 138, hit our first and second targets, so we made some nice money on that. And usually it's suggested to tighten stops up. But for those that are still holding out for T3, can't write this one off yet, but it's not looking very good. We're at 134 now. It won't look good if we break 130 with conviction and if Bitcoin keeps going down. So it could bounce here, and I'll say this: it's subjective to step in and buy it here at 130 with a stop somewhat below. You can buy it at 130. Well, it's at 134 now with a stop. 125, 126. If it can pull back up and head up there, you're talking 100% return on your money almost, and very little compared to the downside. Overstock, same story. Overstock's actually up today. Overstock's been pushing against this 920 level. That upper line, even though the target was at 915, I set it below the upper line. That upper line's at 920, and it is just continued to push in there. So it's wedging up in what we call an ascending triangle pattern. That's an inherently bullish pattern. It can break either way. Respect either way it breaks, because that's likely the way this overstock will go. But if it can break to the upside here, especially if Bitcoin can get some traction to the upside, then it has a shot here at that next target at 1190. Let's talk the VIX and TVIX. TVIX is still an official trade, an active trade, has been for a while. Fortunately, they tried to run at our stops, but didn't manage to get us. They missed it. We had a low there of 38.33 versus a stop of 37.60, and we remained above it. So still an active trade, up about 35% today. We've cleared that first target. As nice as this chart looks, you see a bullish, wedge or downtrend line breakout, back test, second test of those lows. It's really over time, because of the decay on this one. When you look at a long-term chart, TVIX will only go down over time. Even it'll have rallies in between that can measure well into the double digits, even triple digits quite often over time, because of the leverage factor in this one and the fact it's tracking the VIX, which is you can't invest in directly. The VIX tends to have a floor, not a hard floor, but you can see I'm rolling back here decades, and you can see about $10 is the limit on the downside on the VIX. The ceiling is not as well defined, but the floor is. Now, you can't buy the VIX. You and I cannot trade the VIX directly. You can trade it indirectly via VIX options, futures on those, or VIX futures, options on the futures, or the ETNs that will track the VIX futures, such as TVIX. So I wanted to say that's where the VIX is right now, and VIX is at a pretty good resistance level. Hence, the reason I still think we'll get a reversal here and a bounce. That 25.58 level, I've had that on the chart for a while, and you can see in numerous instances, a little bit above it on those two, but that's what's capped a lot of these rallies. Not to say it can't go higher. So I think we're at an important inflection point as I do the video, and go down much more than today's lows, much more than just a slight undercut. What happens? The floodgates can break, stops, next layer of stops get hit, more longs capitulate, you get a little panic selling in the market. Otherwise, the buyers step in today and reverse a good part of today's drops, which I'm leaning towards, at least just for the very near term, and then the VIX will come on down. I may revise that second target. Being that the VIX is at resistance right now on TVIX, I may revise the second target. But what I wanted to show you is TVIX is at resistance. I'm sorry, VIX, the spot VIX, which we're looking at, and when I look at TVIX, you're not, because again, this is a distorted technical picture due to the leverage, not just the leverage, the fact that it's rolling futures contract, it has slippage, it has fees, commissions, expenses that the spot VIX index doesn't have. So maybe time to take profits if you're an active trader. Now, I can tell you this thing can explode and still has the potential to go up there. If you're not a very active trader, just, or even if you're an active trader and you want to try to capture the big run, just lower stops, set your stops. I'm sorry, raise stops on this one, and then let it run. If the market breaks down and it takes another, 3, 4, 5% plus lower, this thing can easily hit any or all of these targets here. Right now, we'll leave this as the official final target, and I'll make a decision whether to update the price targets or not on that one. All right. What else? That's it for. Oh no, there's one more official. Those are all the longs. We've had an official short trade on Paychex forever and a day, it seems like. But there's not been enough for me to modify the trading plan. We shorted that thing way back. Entry that would be at 85.98, but I think it was back here, maybe on the back test. I can't remember exactly where. I'd have to reference the notes. We came very close, within I think less than a percentage point from hitting our first target right here. We reversed, went back to break even, and we've come full circle. What happened is another one where they we didn't just manage to avoid being stopped out. I have a stop on that trade has been set on a daily close above 90.33. We closed the day right there at 90.23. It's nice to see this because usually it's almost as if it's ironic that's comical. They almost like they read my stops and then go in and clip the stops and then turn around to go on. Like as many trades have done this. Like Fizz, we had a intraday spike right there that clipped the stop and then it went on perfectly to hit my third and final target. And from that point, with that's what you call a stop raid. That was not counting the dividends this one pays. That was a 50% return right there. And there's been others like that. So sometimes I'll just bump up. I'll take where I would normally put the stop and I'll even add a little bit to it. So like I said, so far so good. It's far from over yet because we're not even back to break even, but close to it now on paychecks. And for those still in it, I just want to say here's an uptrend line right here. If that breaks, that would be bearish. You also put in, when I said it came full circle, we put in another divergent high. The basis for this short trade to begin with back then was it had just come off a divergent high right here, negative divergence, broke down. I think we took it on the kickback rally again, somewhere around there, and just barely missed our first target. So I just wanted to update it for those of you still in it. And it's also a setup. If it breaks that level, then that opens the door for those additional targets. All right, that covers the official trades. I believe that's all of them. Netflix was an unofficial trade at the golden shorting line the other day. And I mean, wow, this one's going to go down for the record books. That golden shorting line has just offered so many attractive short entries. The other day, I posted it right here. We broke down, kicked back, and I said it was an objective short entry. We hit our first target today. Remember, it's an unofficial trade. If you don't see T1 equals, T2 equals, then you're looking at the actual support levels. On my short trades, I always adjust and set the targets just above there in case the buyers step in early, and you can see, so we effectively hit that 360.41 level today with a low of 361. You're talking 69 cents on a $360 security. You're talking a basis points, meaning a mere fraction of 1%. So that's effectively a tag. There's the reaction bounce so far. The big question to me is how far does the reaction go? On the home page, I put up a post. Somebody inquired about it, and here's the uppermost bounce target. There would be about 378.08. If we get there, that would offer another objective short entry. It would be a backfill or close to it of today's gap. Go either way. This one should probably just sit tight, or if you're an active trader, take profits and then recycle back in if and when today's lows or that 360.41 level get taken out. So to me, it's a matter of since I'm leaning towards a bounce in the market, I'm leaning towards this. Maybe not all the way up there, but come up, at least test the top of that gap there, and maybe go halfway into it or so, and then another leg down and come on down to hit this. The final target here is about 338 plus this uptrend line. That's where I think we go before all said and done on Netflix. And so what is that? So far we're good for, we shorted on that kickback rally, about a 6-7% drop almost in just a couple trading sessions. So congrats to those that caught it. And let's see if there's anything else before I wrap this up. No, yeah, there is one more thing. I want to get to coffee, but I'm going to brighten this trend line up a little bit because that may come in, certainly coming into place so far on QQQ. And so far, looks like we ran right at that low. We're still zigzagging down. We can't say it's over. You'll know it when you see it. The algos, the buy programs kick in. You're going to start to see some impulsive buying today, and I think you'll probably get that before the end of the day. As of now, you have this little zigzag stair stepping down, and I'm going to draw you a trend line here in a second that could do the trick. So, the near-term trend is down, but what might spark the rally? That one's not so well defined. Let's not try to force that. Let's see what we have on SPY. Well, we have somewhat of a decent trend line on. These are 1-minute charts. I'm just playing around with this as we do it here, but I think what'll probably spark a rally today, if we get it, is a break above this level here. That was just today's low, the open 323.63. Let's see if that aligns with anything on QQQ price resistance wise. Yeah, I think right here. I think that'd be at 220, 226. It should do the trick. We'll see. back to the one other trade idea that I wanted to update because I've mentioned it recently is Joe Coffee ETN. Still working its way up. Here's an uptrend line. This is an ETN, tries to track coffee prices, doesn't do a perfect job, but we're still in an uptrend since the breakout. KC Coffee Futures have pulled back. So what you have is the uptrend line, which they kind of dip below, but they're still, what it did here, you have the, well, first of all, you had the breakout. This is the longer term. This is the case for a rally here. The divergent low, nice bullish divergence, and then we've been in an uptrend since. Today we had a little pullback, took out that trend line, but we also put in a small divergent low right there. And remember, we're in a near-term uptrend right now. That uptrend will be confirmed. We need to hold below, we have to stay above, of course, this reaction low and ideally this one and keep that uptrend intact. But we also now have to take out these two previous reaction highs, particularly this one here, because that's the big one. And that will say, yes, we're in an uptrend. So I'm still favoring this, but had a pretty hard smackdown today. So just best to keep it light and Joe for right now. But I like it. I don't love it, but I still like it. I still have a position in that. Not that it should matter. And again, to me, it's all about diversity. Don't put all your eggs in one basket. You're going to be right on some of your trades some days, and you're going to be wrong on others. And it just, to me, it feels a lot better when I have one position down, but then two others that are up and offsetting those losses. It makes me not kind of second guess, and it keeps that emotion out of it that kicks in usually when you have all your eggs in one basket. If you're only trading QQQ or SPY, or you're only trading coffee or Bitcoin, whatever it is, yeah, that's what tends to whipsaw both your portfolio, your account balance, as well as your emotions. And that's where most people, you might have great skills at identifying setups and breakouts and trendline support and resistance level, but where I think a lot of people may fail is just, not where they over-concentrate a position or take too large a position size in something, and then it goes against them one day and they're all of a sudden they can't see straight because they're second guessing their position because they're down more than they're comfortable with in dollar terms. So all right, that's it. We'll wrap it up here. If I see anything else that stands out or anything I forgot to cover that I've been highlighting recently, I'll follow up and add that in the comments section below this video. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.